Hi, welcome to MyWealth.com. I'm Mike Conlon. I'm one of the senior instructors with the courses. Welcome to today's blog. Today's blog is entitled The BRIC Countries, Unified in Their Hatred of the U.S. Dollar. Right, when Goldman Sachs coined the term BRIC for Brazil, Russia, India, and China for the fastest growing developing economies in the world back in 2001, I highly doubt that they thought that within 10 years these countries would actually take their advice and form a coalition. But yet here we are. All right, the first BRIC Summit occurred this past week in Russia and went largely unnoticed. Okay, more of a symbolic meeting than anything else, the one topic on everyone's mind was what to do about the U.S. dollar. All right, why was this meeting symbolic? Okay, because the BRIC economies have absolutely nothing in common. The only common factor they have is that they hate having the U.S. dollar as the world's reserve currency. All right, let's face it, these countries speak 4 different languages, they're on 3 different continents bordered by 3 different oceans. Right, one country is communist, China, another formerly was, Russia, and the other 2 are republics. Right, half of the BRIC nations are actually commodity producers, Brazil and Russia, otherwise known as Brussia, okay, and the other half are end users, Chindia, or China and India. Okay, with this in mind, one would think that they would have different reactions to the strength of the U.S. dollar, but surprisingly they all seem to be on the same page. Let's take a look at the Claymore BNY BRIC ETF, the EEB, versus the U.S. dollar to compare the 2 to get the full story. Let's have a look.
As always, be sure to check out the written blog at www.mywealth.com/blog. Okay, so we're looking at a chart here of the Claymore BNY BRIC ETF, the EEB, versus the U.S. dollar. As you can see from the chart, that when the U.S. dollar is going down, okay, the BRIC ETF is actually going up. Okay, this is because they have an inverse relationship. Okay, so it makes sense that from time to time some of the BRIC countries would like to see us have a weak dollar. Okay, but yet we always hear that China is concerned about our weak dollar. Okay, that we have massive deficits. So what gives here? What do the BRIC nations actually want from the U.S. dollar? Well, the short answer is they don't know. All right. The problem is that Brussia, namely Brazil and Russia, they tend to benefit from having a weak U.S. dollar. Okay, a weak U.S. dollar tends to be inflationary, which results in higher commodity prices. Okay, and as we know, Brazil and Russia are commodity producers, so that means more money for them. Okay, on the flip side, Chindia, meaning China and India, they benefit from a stronger U.S. dollar. Okay, when there's a strong U.S. dollar, okay, the U.S. will consume more of Chindia's goods. They will have lower energy costs because, like us, they are end users of commodities. Okay, and they'll be able to get more interest on their U.S. dollar reserves. All right, but right now China's holding massive amounts of U.S. treasuries, so there is a little bit of a conundrum there about what a strong dollar would mean for Chindia. All right, so what did they actually hope to accomplish in this first summit? Well, it was basically a wake-up call to the U.S. and the rest of the world that these economies want to be taken seriously. Okay, after all, it wasn't that long ago that China was accused of unfair trade practices, and they've been criticized for keeping their currency pegged to the U.S. dollar. Okay, Russia, on the other hand, they were privatizing companies and blowing out foreign investor holdings. All right, and lastly, Brazil, not too long ago, they were defaulting on their debt. So don't wait. Get in a course, get educated. Go to www.mywealth.com and learn about these different currencies and countries and how they affect one another and how it affects the markets overall.
Even after their past transgressions, the BRIC nations claim that the problem is having the U.S. dollar as the world's reserve currency, okay, that the United States manipulates their currency. Okay, they wouldn't even be having this conversation at this summit if it weren't for a guy sitting in an office at 85 Broad Street. All right, for those of you not to know, 85 Broad Street's here in New York, and it happens to be the world headquarters of Goldman Sachs. So as you can see, the BRIC countries are nothing more than a collection of developing economies looking for a bigger place on the world stage. Okay, but rather than all the negative talk about the United States, they should be thankful that their past sins have been forgiven and that they've been encouraged to grow and become prosperous. Okay, after all, it could be worse. Emerging economies, South Korea, Hong Kong, Indonesia, and Thailand could have been added to the existing Brazil, Russia, India, and China. I'll let you figure out what that acronym is. All right, so to learn more about these emerging economies and how it fits into the world stage, go to www.mywealth.com and check out our courses. Okay, so I'm Mike Conlon. Thanks for being with me, and I hope to see you in those courses.